George Bayruthi from FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. And in this presentation, which is part 8 of the Contract for Difference seminar, I will show you how we trade CFDs, which of course stands for Contract for Difference. And in a minute or two, I will explain to you what CFD trading is about. And for the time being, let me say it's a leverage financial trading instrument. And by the way, if you are correct in predicting a market movement, the profit is multiplied several times. So enjoy the presentation, and if you enjoy it, give us some feedback and tell us how you felt about it. Well, first of all, what is CFDs? CFD contract. It's a contract for difference. It's a leverage trade. So in other words, if you actually put a deposit and 10% goes up, you more or less multiply your earning a lot more. And of course, if it goes against you, of course, the losses are also multiplied by several factors. However, with CFDs, there is only a small outlay that you put in when you enter the trade. So there is high return, and of course, in everything we do in finance, you need to understand the risk and reward behind everything that you do. And of course, this presentation is nothing but of general advice only. And before you take any action, of course, you need to consult with your professional advisor or you talk to us. Let me start how we all got into CFDs. And of course, that was a program to show you that you can start trading CFDs with only a very small amount. So you can see here on the 26th of June, we open an account with $500. And within a very short time, as you can see from the 26th of June till the 1st of July, we managed to actually go from $500 to $647 net after all cost. There is $22. That is actually every time you trade, there is a fee, and that is approximately $22 plus all the interest that you pay, because since it's a leverage and you only put a deposit, the market lends you the rest of the money that you enter the trade with. So here we go. In a very short time, we entered a trade on Appen. As you can see here, we entered the trade when the market was $27.09, and within a very short time, it got up to $29.16, and that gave us a 29.4% profit net. So that was actually an example on how you can start trading CFDs with a very small amount. Okay, so do you want to learn how to trade CFDs? Well, please call us and I'll explain more to you. First of all, the reason why we like to trade CFDs, and by the way, there are other leverage products such as options. However, with CFDs, there is no expiry date and there is no such a thing as time decay. When you trade options, the further you are in the trade, there is a time decay. Let me tell you that after a short while, we decided to put more money into the trade. We put an extra 3,000, so we started to play with 3,500, and within a very short term, we ended up from the 1st of August till the 21st of August going from $3,500 to nearly $4,000. Of course, because of the extra capital that we put in, we ended up with 12% profit. That is actually net profit, as you can see here. Anyway, we ended up going further in the trade, and you can see here we bought the British pound and we closed it in 2 days, and we've made some little bit more profit, and that's how we ended up with 3,996. Let's call that 4,000, which shows you the 12% profit. Okay, beyond that, we decided to actually put more money into the trade, and we started to trade, as you can see here, various components in August, and we ended up pushing our market value to 4,814, and that turned from 3,500 to 4,814. That is actually got up to 37% profit. That, of course, a bigger account with many options. That's the reason why we put more money in the trade. Further than the $3,000 that we put in, we decided to put an extra $500, and we started to have a market value or an outlay of $4,000. And you can see here the $4,000 turning into $5,370, and right through all the way until today we've got $4,000 into our market, and I'm going to show you the progression from 4,000 to what happened to our capital. Okay, so how we managed to get 5,370 and made 34% profit? Well, here are all the trades. Appen, by the way, after we're making some decent profit at the very beginning, we ended up losing money because Appen took a reverse positions, and we ended up with nearly $1,000 loss on Appen. However, we made good profit on the British pound versus the US dollar. As you can see, the losses in Appen was compensated by the profit in the trading the British pound versus the US. We made a small profit on Karoon Energy, and we made some decent profit on ASX 200. That is the gauge, that's the index. We made nearly $1,600 profit. Perseus Mining, small profit, and then we made some losses on very small items. And then we made overall, as you can see here, $5,370 profit. That turns to be 34% profit on our capital. Then we did more trades. As you can see here, we capitalized on the British pound, and you can see here the British pound has given us some decent profit, and that's how we made 66.3% profit. Okay, as you can see here, the trade with $284 profit on that particular single trade, trading 50,000 British pound versus the US. Further profit made 6,453, taking us our profit to 61.3, again thanks to the British pound and the Australian dollar and the Australian ASX 200. Finally, this morning we can see that our account is now worth 7,273 over the $4,000 injection that we entered with 500 plus the 3,000 plus another 500, gives us today a profit of 81.8% profit. And again, you can see here the trade, our capital gone from 6,700 to 6,800, then to 7,098, took us to a total profit of 7,225, then to 7,400, then we lost a bit of money and we're down to 7,167, and we had a bit more profit the last couple of days to take our profit to 7,272, which is 81.8% profit from the end of June. Very nice profit. All I really wanted to show you is that how you can make money on CFDs. And now the question is, if you really want to learn how to trade CFDs, first of all, once again, CFDs stand for contract between two traders. Normally there is a buyer, and of course you need a seller. Of course, as a buyer, you expect the market to go higher. The seller has got expectation the market will go down. So we have two different positions, and you trade with a contract for difference. The entry price versus the exit price is actually the difference. So if the price went according to what you suggested, the difference is your profit. If of course it goes against you, the difference will be your losses. So of course there is risk on every single transaction of any nature in finance, and of course there is no guarantee that anything you're going to do, whether you trade CFDs, buying shares, options, commodities, there is no guarantee. However, if you know how the market trend is moving, and as long as the trend is your friend and you act on it, then you make money. Of course, the challenge is to learn when to take profit and when to take losses when things go against you. So if you want to learn more, all you have to do is call us, and we have courses that will teach you from day one how to actually take step by step on how to trade CFDs. If you want to take furthermore, by the way, this is the disclaimer before I go any further, and everything we said today is of general advice only. So if you want to take any action, before you take any action, please consult with us or with your professional advisor. I don't know your financial circumstances, so that's the reason why I'm saying that. And if you want to ask any questions, all you have to do is write to me. My email is george@fssecurities.com.au, george@fssecurities.com.au. If you want to call me on my mobile, if you're ringing from overseas, 61, that's the country code. You don't need the 0. It's at 61-411-259526. Happy trading, and I hope you enjoyed the presentation. And once again, if you like the presentation, please give us some feedback.